Right, good morning everyone. I'm just going to hang on for another minute or so just to get a few more people to join. I'm going to be speaking very shortly about research and development. As you may see, we've got a few minor technical issues. My screen keeps flickering, so occasionally I have to sort of lean over like it's doing at the moment and sort of fiddle about with it. I have no idea what this is. It's been doing it all morning. Hopefully the content's going to be so dynamic and interesting that you're not going to be put off by not being able to see my pretty face. You're going to listen to what I have to say. As I said, I'll just give it one more minute. Damn this screen. And then we'll kick on. How's about that? If you want to go and make the quickest cup of tea there ever was, now is a good time to do that. Also, box of tissues to dry your eyes when the jokes come thick and fast about R&D, because it's such a jokey subject for sure. Right, okay. The technology is in abundance here this morning. I have people texting me, watching, saying you can start now. This is wonderful stuff. So anyway, yes, good morning, everyone. As I said, for those who've literally just joined, we have a few problems with my screen. It keeps flashing, so if I keep reaching towards the camera, I'll try not to move. We'll see what we do. I hope everyone's safe and well at the moment in these very challenging times. My name's Neil Staff. I'm the tax partner at Raffingers. I do a number of things here on a good day, including HMRC inquiries, etc. But today I'm going to talk about my other specialist area and the firm specialist area, which is research and development. I'm going to be covering a number of things. We're going to get into what research and development actually is with some examples. We're going to talk about the qualifying costs, because these are different to just the costs that are claimed in the normal accounts. There's different rules, and we'll talk through that. We'll talk about the claim periods, basically how far can you go back if you've been doing R&D for a while, and the claim process itself. I'm going to talk about the benefits to the company in terms of corporation tax savings and R&D tax credits. My presentation, I think, will be maybe around about 30 minutes. So basically, guys, hold it together. I have sat on R&D seminars before, and they've been crushingly dull because people just get into the absolute details of what percentage of tax you can get back. If anyone has seen me present before, hopefully not with a flickery screen like this, you'll know that I try and keep things sort of fairly low key and interesting. I kind of work on the basis, I would hate to call this an idiot's guide, because that might suggest that I think there's people out there who are idiots listening to me. Although, why would you want to listen to me? I'm not sure. But basically, I know that when I'm listening to stuff, I like people to assume that I really don't know very much and to pitch it at a very basic level. That's what I'm going to do today. I'd like people to be able to come out of this and at least understand the process and understand what research and development is. And then you can go away and apply those principles to your company to see if... Oh, okay, I've just had a message from my technician to say, stop fiddling with the camera. It's to do with the light frequency. There you go. I'll stop fiddling with the camera now. There you go. So let me just start with a basic overview, and then we'll start diving into sort of a few things. As an overview, research and development has been about for many years. Okay, it's been endorsed by various governments of the day. UK governments have always wanted the UK to be a centre of excellence, and ideally they'd like companies to locate in the UK that are carrying out research and development, and they like to reward entrepreneurs and companies that are doing R&D work with some very generous tax reliefs. To be clear, what R&D isn't, it's not a tax scheme. We know about things like Icebreaker with Gary Barlow and employee benefit trusts and all sorts of things that HMRC do not like. HMRC do like research and development. They have dedicated units to review claims. And I have to be honest, having occasionally dealt with the people in the R&D office, they're actually really quite nice tax inspectors. At this stage, I'm not quite sure what slide we're on. Ashley, I'm not sure if there's a way. Ah, there you go. Do you want to By the way, there's a little game with a prize at the end. It's called, can you guess the subtle thing that we're going to do when I need someone remotely to turn the page for me? So do you want to go to the next page, Ashley, if you can hear me? There you go. That's just generally about us. Can we go to the next page after that? Okay, there's me. I'm not going to dwell on that too much. All I would say is that where it says track record, identifying qualifying costs of 28 million, that's a little bit out of date. We're above 30 now. The savings we've secured for clients over the years of 5 million is about right. Thank you. So we're going to start off with a few little misconceptions. I speak to a lot of people about R&D, and I think a general misconception is that it has to be the cure for cancer or a cure for the common cold or rockets going to the moon. And don't get me wrong, it can be that for sure, but it can be a lot more basic. It can be something that just applies to your company. It hasn't got to benefit sort of mankind, generally speaking. And a little bit later, I'm going to be talking about some specific examples of claims that have gone through, so you can see that basically a sort of a change to a process or a new design for something can actually qualify. Thank you. So let's talk what counts as a qualifying activity. Now, as you can see from the screen, hopefully you can see that as well. The official version that started way in the early 2000s was set out by the Department of Trade and Industry. And then that was subsequently consumed and rewritten by HMRC. And it talks about resolving scientific or technological uncertainty, which is wonderful, but very hard to apply in your own personal circumstances, which is why I will come to some examples later. But just generally speaking, it can refer to creating new products, or new processes or new services, or if you're changing or modifying an existing product, process or service. Again, it hasn't got to be an IT company or a pharmaceutical company. We've literally put in claims in this month alone for several building companies, a printing press company, a company that designs gift packaging, R&D. As long as it's a trading company and it's a viable R&D project, it's worth continuing. I think we can move past that. That was just saying how good we were. Can I claim for aborted R&D projects? The answer is yes. Again, there is a misconception that if you start doing something that's connected to your business and it's R&D, but it never quite got round to working, you can't claim. The answer is no, that's not right. You can claim. R&D by its very definition is innovative, and not all projects and not all ideas are going to be successful, but HMRC will still reward you, okay, with your qualifying costs, which I'll talk about a bit later, even if your project wasn't successful. Tell me about how the SME scheme works. Okay, so there are 2 research and development schemes, and luckily I'm only going to talk about one of them today, because I should imagine that everyone who is listening and everyone who's a director of a company would qualify for the SME, which is small and medium enterprise companies. The actual definitions of which are sort of based on turnover and balance sheet entries, but by and large SME is a better scheme. The enhancements are better, the rules are better than the large company scheme, and I'm not going to go into any more detail on that. Now what I'm going to do, okay, yeah, easy Ashley, you didn't see the sign, did you? Okay, we're going to hold it here for the moment, because I'm actually going to get into, rather than talking generally about the scheme, I'm going to start talking now about some of the specific projects, because I think the important thing is you're listening and thinking this is all well and good, Neil, but get on with it. What is R&D? Because I want to find out if it applies to my company. So I'm going to give some practical examples of some claims that have gone in literally over the last couple of months and which have been approved by HMRC. So the first one I'm going to talk about is one of our clients who's a building contractor. And basically they were brought in, there was a sports club, and surrounding the sports club were a number of fields, and some of the fields in lower lying areas were just getting wet. They weren't draining, they just couldn't be played on. And basically they were asked to come in and say, can you actually organise some sort of drainage for these pitches? Now they'd already asked a number of companies and they just said, that's not us. and our company did some sort of survey and actually worked out that the pitches were beneath the water table area. So there was just a problem with drainage, and typical drainage and soakaways where you sort of put various bases and soil and stones, etc., that just wasn't going to work. But our clients like a challenge, and they said, yeah, okay, we'll look at this. And they did what anyone should do when you're doing R&D. They thought, well, is there any information out there in the first place? Has anyone written a manual on this? Has anyone come up with the same idea? And they did all of their research and there wasn't anything. So then the specialists basically sat down and planned and designed a unique soak-away system where basically water was able to sort of soak through certain things into chambers which could then be pumped away, and it effectively reduced the water table for the area of the playing pitches because they were able to drain it away in a unique way. Now, what you would take from this, and I'm going to come up with some more examples in a minute, I think the rule of thumb is if you're asked to do something and say you're a building contractor and you think, oh, hang on, we haven't done this before. This is quite unusual. I've got to sit down and think about this and plan this, maybe build a prototype or do some testing. That's your first little flag to sort of think, I wonder if this is research and development, because that's what this company did. And when we actually sat down and planned what they'd done, it was our view, it was R&D, it went to HMRC, they agreed, and their claim was successful. So that's an example of a building company. I have another building company example as well, where our client, they tend to do work on very swanky buildings up in sort of the centre of London. And this particular client said, we'd like a suspended ceiling, but we want it made out of such and such material, and we want it this size. And when they looked at it, they realised it was going to weigh far too much to actually hang. It wasn't just like normal materials. And they spoke to the client and they said, well, look, let us actually do a little bit of work. Let's see if we can find an alternative way to fix it. Let's see if we can find an alternative way to actually have what you want, but maybe using slightly less heavy materials and the way that these materials are put together. Again, it was something they needed to sit down and think, haven't done this before. Is there any information available? No, there isn't. They built several prototypes and ultimately they got the job done. And again, that was R&D because it's a problem. The information wasn't readily available. They've had to sit down and work out a way to do it, which was successful. Although having said that, if ultimately it couldn't be done, it would still be a qualifying R&D activity because they tried. We've also done claims for sort of non-building companies as well. For example, one of our clients is manufactures gift boxes for sort of anything. You approach this company and say, we'd like a gift box to display our rings or to put things in the post, and they do a very standard setup that you can say I have 20 of those and 40 of those, but they've actually got an R&D team which produce new style boxes and new style innovations. Now let's just be clear, we're not talking about just making a different box in a slightly different shape, because all you're doing, to be honest, there is using existing technology to make something that's a little bit different. So that wouldn't be R&D. What they are looking at is different box designs and shapes and materials, and putting together materials that haven't normally been put together. So, you know, do you have to staple them? Do you have to glue them? How do you actually get them to look particularly nice? They're using some very, very new sort of like paper that's made out of ground rocks, sort of new innovative covers and things that are put together. And ultimately we did a technical report, which sounds a lot better than I've just presented it, to HMRC, and they agreed that all of their activities were qualifying as research and development. Their end product is basically display items that are absolutely bespoke and unique, and they're for sale now, but they've developed them out of nothing. So again, that's R&D. Another one I'm going to give you is a printing company that literally went in last month and was processed and was agreed. Basically, the client had, it's a standard printing business. They've got various presses, and the company had a chance of a really big order to come in. But the presses they had wouldn't cope for the particular end result that the client wanted. So the client did all the math and got in touch with the people that provide their presses and said, is there any way we can change this to actually do what it is, even though the machine isn't designed to do this? And the manufacturer said, no, it's never been done before. Our technicians say it can't be done. What you actually want to do is upgrade your machine and buy this fantastic thing over here for £250,000. And the client couldn't really afford that. So they checked to see if anyone else had done this. And if they had, they certainly haven't published the results. So what they did was not to completely strip down the machine, but to broadly look at what it did. And they did strip some of it down. They rebuilt it in a certain way. And ultimately, over the course of about 3 or 4 months with numerous tests, they modified an existing machine to be able to do more than it was actually marketed to be able to do. And it could actually do this extra job with larger paper, larger volumes, all through sort of setting things in a slightly different way. Again, that claim went to HMRC and that claim was accepted. So the thing to take out of this, as I said, if you're doing something that is novel and unique, building companies, if you're asked to build a house, but can you put a wall there instead of there, the chances are that this is not going to be R&D. But if you've got to think about it because it's unusual and it's a problem, and you've literally got to go away and plan it, you know, this is your starting point to think whether this is R&D. And as I said, it doesn't have to be a building company. It can be all sorts of companies. Obviously IT companies or anything that you do that requires someone to sit down and actually write some code for you in one of your products or one of your sort of designs or in-house things, then that again is probably R&D. I am just, for the sake of contrast, going to refer to a couple of things which is not R&D, just to give you an idea. I have had it put to me that someone has written the most fantastic spreadsheet to deal with all sorts of things to do with the business. And I've seen the spreadsheet. It was quite a few years ago, and it was fancy Dan. I can tell you, you put figures in here and it would project through, and it probably is the only one in existence that actually did that job. But is it R&D? No, it isn't. Because the knowledge behind writing formulas for a spreadsheet is known by a lot of people. That knowledge is known. How you actually write the formulas doesn't actually make it particularly innovative, even if you've got 17 pages of calculations. Another misconception is websites. I've had clients come to me to say, I've got a bespoke website. It's literally nothing like it, but when you go on it, it's got the standard links, who we are, what we do, and you can click through to product lines and you can click through and get to the director and what the director likes to do in his part-time. Websites, even if they're bespoke to your business, are not going to be R&D because the knowledge behind how to build a website has been around for some time. And unless there's something specifically on your website that is R&Dable, and I'll give you an example, it's not going to be R&D. About 5-6 years ago, when this was the vogue, we had people designing websites, but actually having hyperlinks, where if you clicked on something, it would take you through to another website and it could sort of link you up. At the time, 5-6 years ago, maybe more, it was quite unique, and I've put R&D claims in, but now I doubt it because I think everyone knows how to do that. Another example would be, this is a hypothetical one, let's say that we've got a trading business, and let's say that in his part-time, the director is one of these guys that likes to build rockets, as in the things that are about 2 yards high, and they can go 1 mile or 2 miles up and possibly actually get out of the atmosphere. And he could do that, and even the company could even subsidize him, although it wouldn't be allowable costs. And he might say it's R&D, and the thing is, it could well be R&D, but unless it's connected to your business, then you can't claim the costs. So if his business is a greengrocer or a builder or a printer or whatever, building a rocket that sort of flies into space is just not going to be a qualifying activity. Say that with your teeth in. A qualifying activity. It needs to be a trading company as well. It can't be an investment company. I think that's where I'm going to leave it purely for some of the examples, and I'm going to move on now. So if we want to sort of flick through some sheets, and then I'll start using the sheets as my own.
Neil, can you hear me? Neil. Hi, Neil. I've got a question before you go into the next slide, which is quite relevant to what you've been talking about. Is that all right?
Yeah, okay. This is Lee Manning, one of the other partners.
So the question was, do you have an example of hospitality businesses claiming R&D for new menu development, etc.? For example, we have spent a month developing a range of chilled ready meals to deliver out to local customers during lockdown.
Okay. I'd like to thank Paloma for submitting that question because you emailed me yesterday. Personally, I haven't submitted a claim in the hospitality industry that covers that. It's something I'd like to get into in a little bit more detail, okay, with either yourself. I know we're actually doing the claim together anyway, although it wasn't specifically that, and I know you've said you've got some other people that might have that. I'd rather pick it up separately. If it's just a case of mixing drinks and foods together to get something original, that's not necessarily going to be R&D. I'd like a little bit more information. I can't really give you an answer on this at the moment. I kind of thought we would pick it up after the meeting anyway. So I do appreciate the question.
That was from Lou Henry.
That was who, sorry?
Lou Henry.
Well, Lou, I'm guessing that you know Paloma because Paloma emailed me the other day. Sorry for calling you Paloma, unless that's what you like to be called at the weekend. But anyway, I'm going to have my details put up at the end of the meeting with my email and my contact number. Please drop me an email. Really quite happy to just sit down and talk this through with you to see if there's anything there. Be delighted to do that, but I haven't actually got an answer without getting into it in a bit more detail at this stage.
So would it be if the process of creating those ready meals, ready chilled meals was unique and bespoke and they've done something a bit out there that's not readily available, that would something to consider, is it?
To be honest, it's always something to consider. I've had, bizarrely, since all of the COVID and whatever, I think people are realizing that if they're doing R&D, it's a reasonable way to sort of improve your cash flow. Not that you should be existing on any R&D repayments, but people have been looking at it in a bit more detail. And surprisingly, there's a lot of companies that I think just never thought they would have qualified, that when we've got into it, they have. And claims have gone in, and the earliest ones that have gone in are actually being repaid at the moment. So I would happily sit down with 10 people, even if only 2 were doing R&D, just to make sure that everyone who's doing it will qualify. So again, get in touch after the meeting, drop me an email. I'm really
There's another one that's come through. Does the scheme cover using overseas companies to help develop products which will be eventually sold exclusively in the UK?
Yeah, I was going to come on to this later because we've got about, no, it's fun. We've got slides as to sort of what the qualifying costs are. The answer is yes. If you've got a company or a person working overseas that isn't on your payroll and they're actually carrying out R&D activities for your company, they would be called an R&D subcontractor. It doesn't matter that they're overseas. If they're connected to your company, there are certain restrictions that need to be made, but ultimately the answer is yes. Doesn't have to be everyone working in the UK for your R&D, but I'll come on to that a little bit later.
Okay. All right, I'll let you go on the slides and then we'll cover some other questions.
Thanks. It's nice to see you. Thanks.
And you. I'll go back to sleep.
So hopefully you're seeing the same slide that I am. It says, can I claim if I'm a sole trader? It's a good question. The answer is no. R&D is a corporate tax relief. Okay, it's for companies. So if you're a sole trader or you're in a partnership or you're in an LLP structure and you're carrying out R&D activities, this isn't a relief for you. You might want to think slightly long-term about incorporating your activities to actually get on the bandwagon, possibly the wrong phraseology, but certainly to claim the reliefs that are available to you. But no, you can't claim if you're a sole trader. It's only for limited companies. Next slide. What do HMRC want to see from a tax claim, an R&D claim? Basically, in a former life, I used to work for HMRC. I think I might have mentioned. I was more an investigator, but I did a little bit of work for technical division, including some of the earlier R&D claims. Ultimately, HMRC, when looking at a claim, are going to want the costs broken down. The claim is actually submitted on the company tax return, a CT600, and it's basically a figure of relief, but they're going to want that broken down into the various component parts, which I am going to come to very shortly, which are things like staffing costs and subcontractor costs. So ultimately, whoever helps you with your R&D claim, whether it's us or another R&D professional, we will need details of working out which staff, which subcontractors, what sort of materials are being used. So they'll also want to see an overview of what's being done. The worst sort of claim I have seen by some smaller R&D companies is they've just given the figures and not even tried to explain what the R&D activity is. That's going to raise a question from HMRC. They might not be looking to refuse the claim, but they need to know what you're doing. They need to understand it's a qualifying activity. Thank you. The threshold. Yeah, this. I think possibly I should have taken this out. It's basically, I should imagine everyone listening is going to be an SME. It's less than 100 million turnover and less than 86 million euros in gross assets. I have done large company claims before, but basically 99% of what I do is SME. So we can flick on from this. Thank you. What costs? Now, at this point, we can hold this slide for a bit, and I'm going to talk generally about the costs that we can claim in a bit more detail. So the first thing is staff costs. Basically, the rules for what's allowable for a set of company accounts going to HMRC is broadly, if it's incurred for the purpose of the trade, then it's allowable. R&D is far more specific than that. There are a number of things that you can claim, which are sort of listed down here. Staffing costs. Now, this includes directors' costs and directors' salaries. And ultimately, what we're saying is we have a trading company and we have maybe a director and some employees that are carrying out this R&D work. They will have salaries. There's also associated costs that go with that, which would be the employer's national insurance and also the pension contributions that the company will now make. And ultimately, you can add all these together to get to a total salary cost. What you can then do is to consider, well, what is the reasonable percentage of time that the director and that the employees have spent on R&D? So a basic cost, if you've got someone on 50,000 a year, say there's 5,000 worth of employers' national insurance, and we'll say 5,000 in pension, which is probably a bit steep. So we've got a total salary of 60,000. If we said that this particular employee is spending 50% of his time on R&D activities, what happens is, in simple terms, those staff costs are already in the accounts. We're not going to rewrite the accounts. We're not going to sort of amend the accounts or restate them. But what we have is this cost of 60,000 at 50%. We suddenly have an extra cost of 30,000, which we can claim as a profit reducer, and we would put that on the tax computation. So staffing costs is literally what it says on the tin, employees including directors, doesn't include dividends. If we have companies that are set up with a nominal salary and more of a dividend, the salary element can basically be treated for R&D purposes, not dividends. Just works that way. We now come on to the subcontracted R&D costs. A subcontractor for R&D purposes is someone or a company in the UK or outside the UK, where basically you go to them and you say, I'm trying to do this particular job, this particular activity, I would like you to take this activity on, and they basically do it for you. The difference to, for example, someone who comes in as maybe a consultant who sort of comes in and drifts about and does a little bit here and a little bit there. Consultancy fees are not allowable. A subcontracted R&D cost is when you have a person or a company doing something specific for you, whether it's writing code or making a jig or designing something. Subcontracted costs are allowable. There is a restriction. You can only claim 65% of the costs. Can't really explain why. It's always been in statute. It's still there. There are other restrictions if the subcontractor R&D is connected to the company, which I'm not going to go into because it gets a little bit tedious. You can still claim them, but there's like an extra level of checking that you need to go into. I have to say that those two costs are, generally speaking, two of the major costs in R&D claims. Moving down, we've got externally provided workers. Essentially, an EPW is an agency worker or someone who works under pay-as-you-earn conditions for your company, but has been provided by someone else. Don't see that too often. Occasionally it crops up. Again, the costs are claimable. There is a restriction. Again, it's 65%. Again, it's in legislation. You can't get around that. Consumables is an interesting one. What is consumables? I have to say that if we're doing claims that are mainly IT based or we're writing code, consumable is not going to crop up. This is mainly for manufacturing companies or producing companies, and it's basically where you take an item of stock, if you like, and you use it for R&D testing purposes, and at the end it's consumed. It's no good anymore. So if you're making a jig that can't be sold at the end, or you're literally going to your warehouse and you're taking bits out to put them together in such a way to see if it all holds and if it works, and at the end you're left with something that you literally have to throw in a skip, your materials have been consumed. So that is what a consumable supply is. I'm going to skip one and go to the very bottom line where it says certain energy costs. Just to be clear, that actually falls under the banner of consumables, because technically you're consuming your water, your gas, your electricity, so your costs can be claimed. Realistically, this is the smallest part of an R&D claim. If I'm looking at a set of company accounts and with, you know, a couple of grand's worth of light and heat costs, we'll claim a very small percentage, but it's not going to make you rich. Software, some software costs can be claimed if it's directly relating to R&D. So I'm going to move on from there, please, Ashley. Will claiming R&D affect my accounts? Is actually a really good question. I think I mentioned earlier that if we claim R&D, we don't have to go back and restate the accounts or redo the accounts. R&D, the process is, it's a computational claim. For those of you who are seasoned directors and know what I'm talking about, accounts go off to Companies House. Accounts also go to HMRC. And when accounts are submitted to HMRC, we submit something called a CT600, which is a company tax return and also a corporation tax computation. For those who hopefully are still with me, a corporation tax computation starts off with the profit per accounts. And then we add back what you can't claim, like entertaining and depreciation. And then we claim what isn't in the accounts, things like capital allowances. And it's at this stage that research and development claims, we calculate them in the background, we work out what our qualifying costs are going to be, and then we claim them on the corporation tax computation. The only real change to the accounts is when we get to the provisions and tax provisions, but I'm not going to get into that because it's a bit dull and I promised you I wouldn't bore you too much. So no, it won't affect your accounts going forward. Everything's dealt with by the computations. Ashley, that's good. Can I claim retrospectively? The answer is yes, there is a limit as to how far you can go back. The claim process is that you can't claim real time. So if we said, for example, that, let's use 30th of April, that's a good date. If a company's accounts are to the 30th of April 2020, we can claim for R&D for that period, but the accounts have to be finished and ready to submit to HMRC with the company tax return and the computations, because the R&D figures have to go on the CT600 until the accounts to 30th of April 20 have actually been submitted. We can't make a claim. We can do it all at the same time, but we can't put an advance claim in. Also, we have a period of 2 years in which we can do an R&D claim. So for an example, if you have an accounting date of 30th of April, for 2018, the deadline for making a claim literally runs out today. Once we go past that, HMRC will never go back and actually accept any claims for over 2 years. If anyone tells you you can use such trickery as overpayment relief claims, I can tell you that overpayment relief claims were not set up for this. HMRC will not accept it. It's 2 years from the end of the year. If it's the first period that you're claiming for R&D, it's quite possible that you're going to claim for 2 years, and thereafter it's going to be 1 year after that. So I think that's hopefully the answer. Yes, you can, but you can go back broadly 2 years from the end of your accounting year. Ashley, I don't keep a record of my R&D. Does this prevent me from claiming? In an ideal world, everyone would have a record of their R&D and be able to justify the time spent. I've done hundreds and hundreds of claims, and I've never come across a client that's actually kept that level of detailed record. And I have to be honest, HMRC are actually really quite good eggs. I think they appreciate that unless people are claiming year on year, and unless it's some really large claims like pharmaceutical companies that I have been involved with in the past, people are not going to have complete records. What they would expect with a claim is that the claim is reasonable in terms of what we're claiming and ideally supported as far as possible. In terms of the percentage that we claim for employee costs, I can think of one company only in about the last 10 years that actually had time records that we were able to use. Most people haven't. It's a general fact that if you're looking at a director or a senior person, I mean, a director, for example, you wouldn't want to claim sort of too much, you know, sort of 90, 100% of your time, because HMRC could well turn around and say, well, you can't spend 100% of your time on R&D because who writes the checks and who does the marketing and who goes to the bank, etc. And they'd be quite right. Very rarely do you actually claim 100% of anyone's time. Very, very rarely, even if they're a specialist. You have to bear in mind that everyone does something at some point which is not R&D based. But as long as the claim is reasonable, in terms of the materials that you use, I have had clients that are able to go through and actually pull out what they've used, and we've used those as basis. On other occasions, when it's clear they are using materials, but they haven't got records, we've claimed a percentage of their cost of goods, or we've come up with a figure that we think can be justified. And again, I have to say HMRC are pretty good at looking through claims and realizing that what we're claiming is reasonable. Next slide, please, Ashley. Does anyone get the reference? Am I too old for that? Coronation Street? Ashley won't know. It says, I've capitalized some of my R&D costs. Can I still include them? By this, occasionally when we go through, we create something that is classed as an intangible asset. Now, this is more IT based, and an intangible asset will sit in the balance sheet. And you might think, well, if it's not in profit and loss, can it be claimed? The answer is yes. From a mathematical point of view, the enhancements that we claim, which I should have covered earlier, you actually get 230% of the cost if it's not sitting in profit and loss account. But in answer to this question, yes, you can. Whilst we're here, I'm also going to talk about very quickly RDAs, which is research and development allowances on capital assets. You might say, can I claim allowances on R&D assets? I've bought a big lump of kit, a machine, it's a capital asset. Can I claim allowances? The answer is yes, but they're not enhanced. So what that means is if you've bought a lump of kit, normally you would claim FYA or first year allowance, or AIA. Good God, how old am I? First year allowance, that was abolished in about 1940. Sorry, AIA, the annual investment allowance. You get 100% of the cost of the asset. You get that same allowance if it's a research and development asset. You don't get any more. The only time it really becomes helpful is if you've actually used up all of your AIA allowance and you can take this and put it into a different pool. Doesn't happen very much, to be honest. Yeah, I think whilst I'm here, I am actually going to touch on the fact that once we've identified our general costs, as in subcontracted and salary costs, looking at my notes, I should have covered this earlier, those costs are enhanced. And I think most people who've done any sort of homework on R&D would understand that. And it refers to an enhancement of 230%. What this actually means is if you've got, say, a cost of 100,000, the 100,000 is already sitting in your profit and loss account already. When we look to sort of reinvent it and put that into the tax computation, you will get another £130,000 as a tax reducer, or it could possibly create a loss. In a minute, I'll talk about what some of the R&D tax credits are and how you save money, but we'll go to the next screen. Right, some of these I think I'm not going to go over again because I covered earlier, so I think we can skip the salary. Then there's a subcontractor, which I'm going to skip as well. EPWs will go past that. And again, and again. Aha. How long does it take to get the money back? Great question. HMRC occasionally get behind. At the moment, they've actually, I know for a fact, plugged a lot of staff into their specialist R&D offices. I had a claim come through in 2 weeks the other day, which was a bit of a shocker. It's a nice shock, but I've never quite had one that quick before. Generally speaking, they will process within a month. I think that's what their internal guidelines actually say. So broadly speaking, once the claim is submitted and we've got everything together, about a month at the moment, and I think they're being pretty good about that. Should we go to the next screen, please? Can my claim trigger an inquiry by HMRC? It's a question I can't really answer. I would say not often. I've never seen a full inquiry in the, God, 15, 13 years that I've been doing R&D claims that are spun out of a claim, because as long as the claim is done right and we're not claiming too much, plus it's been submitted by a professional that HMRC recognise, which is us and various other people as well for sure. And as long as it's actually been formulated correctly and calculated correctly, there isn't really a reason for HMRC to inquire. I think if we submitted a claim and we weren't explaining completely, it might raise a few questions, which is not necessarily an inquiry. However, if, for example, we've got 10 people on the workforce and we're claiming 100% of 10 people's salary, that could trigger an inquiry. The answer is you have to treat these things carefully. It kind of feels that, well, if we're doing R&D, we'll just push it as far as we can. There is an element to that, but what you don't want to do is to take the mickey, and that is where a proper competent professional doing R&D claims will come in and guide you as to what the appropriate amounts are that we can claim. Should we go to the next slide? What's our process? Okay. We work exactly the same as any other R&D specialist business out there. And that's basically, it generally starts with either I'm looking at a set of accounts for an existing client, or I get a phone call or an email from someone to sort of say, can you talk to me about R&D? So it starts with a phone call, possibly a visit to the client premises, find out what it is that the company does, what they believe that they're doing that qualifies as R&D. After that, it is a case of we do all the technical work. There's a report that has to go to HMRC, which is anywhere between 2 and 5 pages of A4, just explaining how we've got to the figure, what the technical report is, how the figures tie in with the profits already and what we're claiming back in terms of saved corporation tax or R&D tax credits. I must make a point of coming back to explain how these tax credits work, because I should have done that earlier, bear with me. We literally do most of the work. We will require from you, if the technical report is complicated, I must admit I spoke to a client yesterday, I understood probably about 20% of what he was trying to do, and I said, you're going to have to write me a technical report or at least an outline, and he was happy to do that. If it's more basic, we will write the technical report, and we do all the calculations. We literally go through, calculate everything, send it to you, explain what it is, explain what the saving is, what the process is, and literally what you can expect back in terms of a corporation tax saving or an R&D tax credit. At this point, hold the slide, Ashley. I will actually just touch on briefly how this claim affects in terms of profits and tax credits. So ultimately, you've got this extra cost that we're going to claim, and that can do one of 3 things, really. You've either got an existing profit, which is going to be reduced down to a smaller profit, so in which case less corporation tax. If we're looking at an earlier year, it might be that you paid the original corporation tax, and as a result of the claim, you've overpaid. That's a case of checking the post. That's how it works. That's probably the easiest to do. You could have a current year where you're reducing the corporation tax, but the due and payable date hasn't arrived yet. I've got several of those on the go at the moment. In that case, once it's agreed, it's literally you're paying less money when your payment date comes around later in the year. It could be, though, that you have a loss-making business, and all that happens is that these costs are augmenting and making larger your existing loss. What can you do then? Well, you have 2 choices. If you think you're going to make profits in the future, you can say, oh, I'll just take the loss. Thank you. I've got this loss. It's now a bigger loss. In the future, I'm going to make millions of pounds, and that loss I can set against future profits. Very few people do that. What you can do is to quantify what the loss is that relates to R&D, and you can surrender that for something called an R&D tax credit repayment. The rate is at 14.5%. So if you've got qualifying costs of £100,000, you could say, rather than have that as a loss going forward, I will give up on the loss, I'll surrender that, I'll take the cheque, and you'd get £14,500 in the post. So that's broadly how tax credits work in a very, very simple way. It also works on the same basis. If you have a profit that ends up as a loss, which is very, very common, you've saved the corporation tax. They will repay that if the claim is agreed. And the loss you can surrender for a tax credit as well. So that's, I should have covered that a little bit earlier. So anyway, let's go to the next slide. No win, no fee. That's the way we operate. I have to be honest, there are so many R&D specialist companies out there. They all work on the same basis. They work on a contingent where basically, if they don't save you money, they won't charge you a fee. And we work on exactly the same basis. We don't ask for anything up front. We won't ask you to pay a fee until you've either reached the point where you've saved some money because we've reduced your tax, or you've actually received a check in the post, or more to the point, it's actually been repaid electronically to us, which is the way that we operate, and we pay it back the next day to you net of our fee. So you're never going to be out of pocket with this. I'm going to be honest and say that our contingent rate is 20% plus VAT. Not a lot of people will commit to that, mainly because it's such an aggressive market. If you would like to go and, if you think you're qualifying and want to shop about, please do. There's enough specialist firms out there, Forest Brown, Leighton's, GGTC. I think you'll find they're all in exactly the same ballpark as us, and in fact, some are more like 25%. So that's basically our fee basis. Next stage. Okay, we're gonna, we can go to that. We can go to my picture. Thank you, Ashley. We're gonna leave this up. I'm gonna take some questions in a minute from the tax partner, sorry, Lee Manning, the other partner, the older partner than me, who's been getting that together. I'm just going to leave this up because it's got my telephone number and my email. I would suggest, if you want to ask some questions or actually open some dialogue, maybe you could jot down my email and drop me an email first. I have a feeling I've actually got a bank of missed calls already. So, but honestly, if you sort of give me your email details, I'll get in touch. We'll have a conversation later today, tomorrow, and we'll see where we go. Lee, have I got any questions, or has everyone disappeared now?
No, you've still got 2 people haven't fallen asleep. No, there's about 40 odd still enjoying your presentation. Not as good as my webinars, but there you go. So we've got, this is a complicated, partly answered. Oh, that's handy. So once an R&D claim has been prepared, what is accepted in terms of capitalising those costs in the balance sheet? If salary costs have been apportioned, can they be capitalised as an asset?
No, it doesn't work like that. Yeah. We're not looking to amend the accounts. We wouldn't. All we're doing is looking at the salary costs that are already in the profit and loss. We work out the percentages of the entire package and just work out what the claim is. It's purely for the claim purposes and getting the repayment. We haven't then got some sort of cost that needs to be reflected additionally in the accounts or the balance sheet. We're just working out the claim based on those costs.
Okay, cool. Someone has put that they have seen menu development accepted within R&D claims.
Okay.
Something to follow up.
I'm not disputing that.
Oh, yeah. So, yeah. I think there's only one more, which is cool. What classes as new processes or services if a business or our business is in the reinsurance industry?
I don't know. I don't think I've dealt with any claims in the insurance industry. I would be quite happy to get an email and pick it up. As I said, I haven't actually. I've dealt with numerous sectors over the years. I don't think I've dealt with anything in insurance. Nothing's coming to mind. I'd quite happily have a conversation with you.
Yeah. It may be their processes, if they've streamlined their process internally that wasn't available. Maybe.
Yeah, that could work. That could work.
Let me see. I think that's it.
Okay, right. Well, I'll wrap up. For those of you who stayed to the end, I do appreciate that. Hopefully the coffee was strong enough to keep you going. I'd like to thank Ashley in the background for literally setting me up. Honestly, it's been a mare. I'm not very technically minded. Just getting this far has been great for me, and thank you for doing that. Lee, thank you for sort of monitoring the questions. Please get in touch, drop me an email. You can try phoning me over the next couple of days. I'll be delighted to have a chat with you and see if we can act. One last thing, just to confirm, if you have an accountant already and you'd like someone to look at R&D, we don't have to be your clients for the whole package. We can literally come in and service your R&D claim, and you can stay with your existing accountant. In fact, we actually operate a no poaching policy, which is the professional thing to do. We're not going to be on at you to come over at us. We can just look after your R&D if that's what you want. But anyway, I'm going to wish you well. I wish you safe. Stay healthy. Good luck with your business, and get in touch if you want.